Thank you, everybody, for this opportunity to Tata Capital to be part of this program, and with such elite crowd that we are humbled and we are grateful to Metalogic and Yasmin and everybody. So I have been given a topic to speak on. That's to address to one of the key issues in steel processing center, and that's about debtors. So debtors do consume cash, and we have seen that in terms of the capital that gets locked. So I am required to speak on the on how do we unlock this liquidity issue. But while speaking on that, I also thought that I would speak something on Tata Capital and on the various diverse solutions that we have in terms of the entire gamut for steel processing. Steel processing, as we have seen since morning, it requires a lot of setup costs. It requires both the capex and opex are at the highest level in terms of steel processing. It's a capital intensive business. That's what we have understood. So before getting into that, I would just have two slides on what is Tata Capital. Well, we are a flagship financial company of Tata Group, and as on 31st December 25, we clocked 2,60,698 crores of AUM, and that's the measure by which a finance company is measured. So we are a AAA rated, that's domestically, and internationally we are rated at BBB minus by S&P Global and Fitch. So what is more interesting and relevant today and to this entire gathering is that 87% of our book is consisting of retail and SME segment. So that's one aspect which is common between Tata Capital and this group, which is therein. So what makes us very unique is about our diversity. We have product almost for almost everything, every facet that you see, both at the corporate level, at the SME level, at the retail level, at the wealth services level. We have suite of products to address to the need that a consumer has. So talking about SME, while we fund the raw material purchases, we fund the data cycle. We also we have a lot of products to fund your capex, and that's something that I would like to add on in my future slides. But before that, I would also, to our understanding, what is the requirement in terms of funding that the steel processing centers has, is that we understand that in terms of setting up a processing center, you need a long-term capital in terms of purchasing plant and machinery, and that's a regular purchase, and you have to innovate, you have to automate. There is a regular purchase that you have. You need equipment finance, you need the machineries to be funded. We have seen that in terms of operating the plant, you need to purchase the raw materials time and again. You have stretched debtors because the customers that you supply, more often than not, you end up giving credit. You have that puts a lot on stress on the liquidity part, and of course for operating the plant you need to have the purchase the regular fuels that you have to run the factory. So all put together, there is an issue in terms of how do you get along all this. You have equity, but is that equity sufficient? Are there solutions that are there in the industry to fuel your aspirations, fuel your growth? And that's the reason that we thought that we will present to you in terms of Tata Capital's preparedness, in terms of giving you solutions with respect to everything. So talking about setting up a processing center, that's like a project cost. So you purchase a land, and then you have to build the shed, you have to purchase cranes, you have electrical fittings, you have solar panels that needs to be fitted. That's quite a sum. And is equity enough? Well, whatever is the gap, I think Tata Capital has various instruments which can fund these processing centers. The setup cost can be managed, and the EMI that we have typically is per crore EMI comes to less than 2 lakhs. So that's something that in terms of the affordability, we can go up to a tenure of almost 7 years when we extend funding for setting up your plant in terms of project finance, or purchase of your cranes, cutters, your solar panels, every equipment that comes under that capex ambit. So having set up the plant, you would also require raw materials, and for that we have a channel finance program which where under the tie-up of the OEM, we extend 100% funding of the invoices from time to time. We also have a line called PID, that's purchase invoice discounting, that we do. The tenor goes, we are pretty flexible in terms of the tenor, but normally the tenor that we see is sought is around 90 days, and that helps in addressing both the data cycle and of course in case you have creditors that nullify that tenor is sufficient enough to address to your working capital needs. We have seen a lot of funds getting stuck in debtors and receivables, and in order to unlock the liquidity, which is like fire on the skirt, that needs to be addressed. For that, we have a very successful factoring program, and I'm very happy to share that almost 25% of our book is towards providing factoring solutions, and most of that factoring solutions that we have provided is to the steel industry. So in terms of funding your operating expenses, I think we have equipped loans in terms of WCDL, or we can also have a long-term loan which can fuel up your working capital for addressing the operating expenses. So of late, we have also seen, and in many matured markets, we have seen that almost 20% of the assets that these mature markets, the borrowers have, are leased. Tata Capital is in a unique position where we are one of the leading lease providers, and we give both operating and finance lead. As we know that lease is very tax accretive, and 100% of the rental that you pay is a charge to the PNL. So to that extent, the tax benefits get accrued to the borrower. We have a flexible tenor for this, 84 months. In terms of buying back that asset, well, in financial lease, there is an agreement that is there on the at the start itself. But in terms of operating lease, we can work out a solution in terms of how do we own up the assets. So that's one problem that always we see that's there with the borrower's mind, that what happens to the asset. So, well, the asset can always be owned up. Finance lease, it's very clear. But operating lease, we can work it out in terms of how do you end up owning the asset. So almost all the equipments that is required by a steel processing center can be leased. So that's one unique solution that is there with Tata Capital. In terms of the topic of this session is that what is that there for giving solutions to the for the funds that are locked with debtors. So, well, we have seen that in terms of the debtors, there are some rated debtors and there are some debtors where there is a stretch. And there are some debtors which arise because we have given some equipments on rent. So, all put together, the funds that are stuck can be made free, cash can be made available through our various programs that we have in terms of the factoring. So there is a non-recourse factoring that we have where we factor then and there and we make the cash available to the borrower. This is a non-recourse one. There is a recourse structure in case some of the debtors are stretched, and we see that as a financer we don't have a view, but you are having a view on these debtors. So these debtors can also, we can discount those bills and we can provide you cash. Overall, our intent is to provide funds ready-made available to you, so that the liquidity issue, which is a burning issue, which can have deep impacts, can be addressed then and there. As I spoke, some of the equipments are rented and you get rents from these OEMs. So we can discount these rents and provide funding solutions to their. This entire slide talks about providing the cash then and there immediately without waiting for the credit period that is extended to the borrower. So one of the key things which might be or might not be very relevant to this gathering is that we have also a module called deep tier financing, which is for the SUGAM loan. So in case a distributor has sub-distributors in terms of their go-to-market strategy, we treat the main distributor as the OEM, and we have a module called the SUGAM loan, where the tier 2 is funded. Their purchases from the tier 1 are funded through a channel finance limit that we extend, and this module is called SUGAM loan. Till now, almost we started 1.5 years back, and we have seen steel industry, from steel industry alone, we have some 800 beneficiaries from SUGAM loan. These ticket size normally are below 1 crore, but it ranges from 5 lakh to crore or 2 crore, something like that. And we do 100% of invoice funding. The tenure goes up to 60 days, and it depends on what is the factor that is allowed by tier 1. The typical interest outgo per crore per day is around 3,500 rupees. So that's the cost that is there. So, what my intent was to present to you was to give you solutions not only for your long-term working capital needs, but also the short-term capital needs. So that's in short our presentation to from Tata Capital to the steel industry. We have a market share of almost close to 20% as far as steel is concerned, and we have taken baby steps and we have reached 20%, and this is because we have patrons and we have customers who have always thought that Tata Capital can add value. And I assure you, not for a single need that a steel industry has or a steel processing industry has can be addressed by Tata Capital. Our strength had always been to make funds available then and there when it is required. So that's all from my side as far as Tata Capital is concerned. Thank you.